Well, on that note, taking a look at the markets, we are where we were at when we saw the market open, 23,230, 80 points lower on the index. Mid-cap index also in the red, but it has pared some of the opening losses. Well, on that note, let me bring on board our fundamental guest for today. Joining me, Siddarth Bhamre, Institutional Research Head at Asit C Mehta Invest Intermediates. Great to have you on the show, Sid. Always a pleasure chatting with you, and I think I'm talking to you for the first time this year. Wishing you a very, very happy new year, although it's been a fairly volatile one in terms of stock market movement. But otherwise, wish you a very, very happy and prosperous new year.
Happy New Year, Nandita, and to all your viewers. Thank you so much for having me again on your show.
Thank you. Thanks a lot for joining in. Let's talk business then. It's the start of the earnings season. We've had, big ticket numbers from IT names coming out. We saw the trend. The commentary has been fairly positive when it comes to discretionary demand. TCS was good. Even Infosys, for that matter, they have revised their guidance upwards. But some bit of, guidance for the next quarter that has disappointed the street. We can see a 4 to 5% downtick on Infosys. But how do you really approach the space now that there are green shoots of improvement in discretionary demand?
Then I would say green shoots in IT were visible, 2-3 quarters before, and the sentiments in IT were very negative. And if you recall, 2 quarters back, most of the street was underweight on IT, and we were saying that valuations are really compelling. Those stories negative, and that is when IT started outperforming. Since then, since last 2 quarters, if you look at year-to-date return, or you see quarter-to-date, or you see last year-to-date returns for IT, they have outperformed markets. Yes, you are right that companies have revised their guidance upwards. The revenue growth has also been in line, but still stocks have been not showing that kind of traction, barring TCS. Because valuation is not as mouth-watering as it was back, a couple of quarters back. Having said that, I believe that IT would continue to perform well, even though street would be wondering. In fact, we got calls from our clients and dealing with that why, despite good guidance and beating street expectations on numbers, Infosys stock is correcting. I think it's merely a profit booking. Yes, next quarter. Probably there might be some hiccups here and there, but let's not assume that IT stocks would start any kind of selling big time. I still believe that looking at the valuations, they are not mouth watering right now, but they are not very expensive. And the way geopolitical situation is panning out, the way earnings slowdown, which we are seeing from companies which are catering mainly to domestic markets, I believe fund managers would be compelled to remain in IT space. And I remain fairly confident over here, and would suggest to maintain the exposure in IT.
All right, maintain exposure in IT. Of course, the demand commentary has been pretty good, and street has actually taken heart from that, and we saw that happening right after TCS results as well, right? But let's talk about the big event next week. Trump's inauguration on the 20th. A lot of jitters around what he'll announce in terms of tariff. There have been talks of 60% tariff on China. He's already called India the tariff king. So back home as well, there are quite a few jitters. But as a Trump trade, what would you look at now, Siddarth?
It's very difficult to guess because today world is thinking that he would come and wage war against China, but there's a difference. Last time and this time. That time China was growing, at very marvelous pace. Right now they're struggling at 4 to 5%, and also. President Donald Trump has to live up to his character, right? Which is unpredictability. So if today everyone is predicting that he would wage a tariff war, maybe it would be too boring for him to do what everybody is thinking. So I would, keep my head down on this, will not give too much of weightage, and will try to identify stories and stocks where the domestic consumption is high, and companies and sectors which are more reliant on domestic growth rather than outward. So if I have to hedge myself from that story, then that's how I'm going to position myself.
All right. Yes. Yeah. We all are, well versed with what Trump tends to do. One morning you wake up and you see a tweet from him, and the entire global market, even our markets, go into a tailspin. So we've been there. But let's see what really happens once he formally takes over. But another space that has been in focus is the entire life insurance space, right? Numbers from HDFC Life are fairly good, but the sector per se has seen a lot of correction. There are regulatory overhang as well. First, before they could get over the what do you call it, the surrender value issue, there was this whole issue about strategy on bank assurance. So the sector per se has been in news. Earnings wise, HDFC Life, as I mentioned, has been good. But how are you viewing it? Do you see the regulatory headwinds posing more risks going forward?
You have pointed out most of the concerns which the sector has going on, not just since last few months, but since last few years, I would say. And stocks, despite or companies, despite posting decent profitability, haven't seen much traction. In fact, on valuation perspective, they have kept becoming attractive. But there comes a point where most of the concerns are in price, and we are seeing that thing happening in insurance space. As you mentioned, HDFC Life, which is one of our top pick, we do cover life insurance space very actively. We are seeing decent traction, be it in APE or new business premium. Also, from valuation perspective, these stocks are looking attractive. We for now believe that the most of the concerns are in price. In fact, you mentioned about one point about banker insurance where there are talks. Mind you, there are no rule as such right now, but there are talks that IDA would regulate that how much percentage of revenue comes from banking channel, but nothing has been implemented as of now. And we are also seeing that there are few regulatory changes which has happened in terms of the commission distribution, which has led to enhancement of margin. We are in a market, Nandita, where most of the companies are disappointing on earnings, and we believe insurance companies won't. And at these valuations, they are pretty attractive. We have, in pecking order, if I have to say, we have ICICI Pru is a buy for us, so is SBI, HDFC Life. As a matter of fact, even LIC insurance from valuation perspective is buy, and we have an hold rating on Max.
Okay, so that's the view, positive view on the life insurance space. Of course, valuations are looking attractive, and perhaps the bad news, or regulatory overhang may be in the price. But last question really. The IPO market has been fairly hot, right? Even though market conditions have been a little volatile, some of the new listings have seen good premium. And in 2025 as well, we are expected to see a barrage of IPOs. Anything in particular that you would want to highlight that one should really watch out for?
A lot of interesting companies are hitting the market. Something which caught my attention, and we have been monitoring is, though I won't take name of the company, but then in power space, there's a lot of traction which is happening, Nandita. And one of the company which is soon going to hit the market is catering to HVDC space, which is more into the transmission side of the power. A lot of companies are talking about or implementing generation, but the transmission is the real challenge. And if we have to do high voltage transmission, then HVDC is the name to go with. So soon you will see probably by Jan end or Feb, we would have one company. It's a small cap company. And that looks pretty attractive, which is competing with giants like Hitachi, Siemens, JBVs of the world. In India, if one has to have HVDC electrical components, then that is the only name to go with. So yeah, keep your eye on, and maybe next time when we are talking on your space, we will give us the name as well.
Sure, point taken, Sid. With that, would like to thank you for taking our time and joining in. I'm afraid we don't have much more time to go, but always a pleasure chatting with you. Interesting, and we'll catch up soon sometime.
So thank you.